everybody.
Silver just exploded, and this is not a normal move. This is the kind of price shock that happens right before massive wealth shifts, and right now the global markets are reacting to one thing only. Donald Trump has signaled major policy changes, and investors worldwide are rushing into silver as a financial shield. And if you're watching this even seconds late, you're already behind because this is not hype. This is real-time capital migration. And today I'm breaking down exactly why silver prices are jumping, what Trump's message actually means beneath the headlines, why big money is quietly positioning right now, and what everyday investors must understand immediately before the next wave hits. Because this move isn't about politics, it's about power, money, inflation protection, currency trust, and survival in a rapidly shifting global economy. And here's the truth. Wall Street won't say out loud. Whenever uncertainty hits the White House, smart capital doesn't wait. It runs toward hard assets, and silver, cheaper than gold, more volatile, more explosive, becomes the weapon of choice for traders, institutions, and hedge funds looking to front-run chaos. And today's surge is not random, it's not speculation, it's not retail hype. It's positioning, because Trump's signals are being interpreted as a warning of aggressive policy changes involving trade, tariffs, the dollar, inflation control, manufacturing reshoring, and geopolitical leverage, and every one of those directly impacts precious metals, especially silver, which sits at the dangerous intersection of money and industry, meaning it benefits both as a safe haven and as a demand-driven industrial metal. And that dual role is what makes this move different from anything we've seen in months, because while gold rises slowly and safely, silver explodes violently when momentum flips, and momentum just flipped hard. And if you're wondering why this is happening right now and not later, it's because markets don't wait for policy. They price in expectations, and Trump's words alone were enough to trigger defensive positioning, and this is exactly how wealth cycles begin. Not when laws pass, not when policies become official, but when signals are sent and insiders move first, and that's what you're seeing on the charts today. Breakout patterns, volume surges, options activity spiking, and physical demand accelerating across dealers worldwide, with premiums rising and inventory tightening, which tells us something critical. This isn't just paper trading. Real silver is being pulled off shelves, and that's historically what precedes sustained upside. Because when physical supply tightens while investment demand rises, and industrial demand remains strong from solar, EVs, semiconductors, and green infrastructure, price doesn't crawl. It jumps. And this jump isn't finished because macro pressure is still building, not fading, with inflation sticky, interest rate expectations unstable, global debt exploding, and currency trust eroding faster than official reports admit. And Trump's stance is adding gasoline to a fire that was already burning beneath the surface, because markets understand that his policies historically favored aggressive trade posture, national manufacturing, supply chain restructuring, and dollar strength volatility, all of which historically lead to higher metals demand, especially silver, because silver is both a hedge and a growth play. And that's why institutional money prefers it when uncertainty spikes. It offers leverage to macro disruption, and right now macro disruption is exactly what's being priced in. And here's where most people miss the opportunity. They wait for confirmation, they wait for headlines, they wait for analysts to say it's safe, but by the time that happens, price has already moved, because markets reward anticipation, not reaction. And right now the anticipation is clear. Big money expects turbulence, and turbulence favors tangible assets, and silver is the most accessible, most explosive of them all, which is why you're seeing volume spikes across futures markets, ETFs, and physical bullion channels simultaneously, a rare alignment that historically precedes strong directional moves. And if you're thinking this is just another short-term spike, understand this: silver doesn't spike quietly. It spikes violently when pressure builds, breaks resistance, and forces short covering. And that's exactly what's unfolding now, because traders who were positioned against silver are being squeezed. Industrial buyers are locking in supply, and investors are hedging against political and economic uncertainty at the same time, creating a triple demand scenario that almost never lasts quietly. And this isn't happening in isolation. Copper, gold, and energy markets are showing parallel stress signals, but silver is outperforming because it reacts fastest to monetary fear and industrial growth simultaneously. And Trump's messaging amplified both because when leadership signals policy change, markets don't wait for execution. They price in disruption, and disruption always benefits hard assets before paper assets adjust. And that's why silver is moving first, not stocks, not bonds. Silver, because silver is the early warning signal of monetary instability. And when silver moves before everything else, historically, broader asset shifts follow. And that's why this matters, not just for traders, but for everyday people watching inflation eat purchasing power, watching savings lose value, watching housing affordability collapse, watching debt explode, and wondering where stability lives anymore. And the answer during uncertainty is always the same. Tangible assets, finite supply, global demand, and silver checks all three boxes, which is why smart money doesn't ask if they should watch silver, and they ask how much exposure they should have. And that's the mindset shift most people miss, because this isn't about chasing a spike. It's about understanding what spikes signal, and this spike is signaling fear, repositioning, policy uncertainty, inflation hedging, and industrial demand acceleration all converging at once, which is rare, powerful, and historically explosive. And here's the most important part. Silver is still undervalued relative to gold, relative to inflation-adjusted highs, and relative to its industrial demand curve, meaning even after this jump, price is not stretched. It's waking up, and that's the difference between hype moves and structural moves, because hype fades, structure builds, and everything happening right now, from Trump's signals to global policy uncertainty to rising physical demand, is structural, not emotional. And that's why this move feels sudden, but is actually the result of months of pressure building beneath the surface, pressure that just found a catalyst. And catalysts are what turn sideways markets into trending markets. And trending markets are where wealth is made, not by timing tops and bottoms, but by positioning during early momentum. And that's exactly where we are right now. Early momentum, not late-stage euphoria. And if you're wondering how high silver could go, history doesn't predict the future, but it reveals behavior. And historically, when silver breaks multi-month resistance during macro uncertainty, moves tend to extend far beyond initial targets because momentum feeds momentum. Traders pile in, hedgers cover, institutions rebalance, and retail follows, creating layered demand that sustains upside longer than logic expects. And that's why dismissing this move as temporary without understanding the macro drivers behind it is exactly how most people miss real opportunities while waiting for fake certainty. And fake certainty never comes in markets, only risk and reward. And right now, the reward profile is expanding while risk is becoming increasingly asymmetric because downside is supported by physical demand and monetary fear, while upside is fueled by momentum, positioning, and policy uncertainty, which is exactly the setup investors look for when building exposure to volatile assets with asymmetric payoff potential. And silver is the textbook example of that setup right now because it's cheap relative to gold, undervalued relative to inflation, constrained by mining supply, demanded by industry, and boosted by macro fear, 5 tailwinds at once, and Trump's signals just added a 6th, political uncertainty, and markets fear uncertainty more than bad news because uncertainty forces hedging, and hedging forces metal buying, and that's exactly what you're seeing unfold across exchanges and vaults worldwide today. And the reason this matters right now, not tomorrow, not next week, is because early positioning defines outcome, because once mainstream headlines catch up, spreads widen, premiums rise, volatility spikes, and risk increases, and the cleanest entries always exist before the crowd realizes what's happening, and that window is narrow. And that's why this is breaking news, not analysis. This is a market alert, not a history lesson. And if you're serious about protecting capital, growing wealth, and staying ahead of macro shifts instead of reacting to them, silver cannot be ignored in this environment because ignoring silver right now is like ignoring inflation in 2021 or ignoring oil in early supply shocks or ignoring gold during banking stress. Markets always warn before they move, and silver is warning now, loudly, violently, and unmistakably. And whether you choose to act or not, capital is already moving, positioning is already happening, and the price is already responding. And that's the reality of markets. They move with or without you. And the only decision you control is whether you watch or participate. And participation doesn't mean gambling. It means understanding risk, sizing exposure, diversifying intelligently and aligning with macro forces instead of fighting them. And right now, the macro force is uncertainty, inflation pressure, policy transition, and industrial demand acceleration, and silver sites at the center of all four, making it one of the most strategically important assets to watch and potentially hold in this cycle. And this isn't about chasing headlines or reacting emotionally. It's about recognizing when multiple macro forces converge and create asymmetric opportunity, and that convergence is happening now, and Trump's signals didn't create this. They triggered it, they exposed it, they accelerated it, and markets responded exactly as expected, by rushing into hard assets before policy shifts materialize, and silver responded faster than anything else, which tells you exactly where smart money sees risk and an opportunity forming. And here's the most important truth you need to understand. Silver doesn't wait politely, it doesn't move slowly, it doesn't trend quietly, it explodes, it spikes. It overshoots, and it punishes hesitation. And that's why most people hate trading or investing in silver, because it demands conviction, patience, and discipline, and it rewards early positioning and punishes late chasing. And right now we're at the early positioning phase, not the chasing phase, and that distinction matters more than price level, because price level tells you where silver has been. Momentum tells you where it's going, and momentum just shifted decisively upward, supported by volume, macro catalysts, physical demand, and political uncertainty, which is exactly the combination that historically produces sustained upside rather than short-lived spikes. And that's why dismissing this as noise is dangerous, because markets whisper before they scream, and silver just started screaming. And whether you're a trader, investor, saver, or someone simply trying to protect purchasing power in an unstable world, silver deserves immediate attention right now, not as hype, not as speculation, but as strategy. And this is exactly why you're seeing renewed interest from institutional investors, renewed coverage from analysts, renewed inflows into silver-backed ETFs, and renewed premiums in physical markets, all signs of structural demand, not emotional panic. And when structural demand meets momentum, price trends, and trends create opportunity, and opportunity doesn't knock politely. It moves fast, and that's exactly what's happening today. And this is why the headline isn't just silver prices jump, it's silver prices jump as Trump signals major changes. Don't miss this move, because missing this move doesn't just mean missing profit, it means missing protection, positioning, and preparedness in an environment where uncertainty is becoming the only certainty. And silver has historically thrived in exactly those environments, outperforming when inflation rises, currencies weaken, geopolitical risk escalates, and policy direction becomes unpredictable. And that's the world we're entering right now, whether markets want to admit it or not. And silver is reacting first, because silver always reacts first, and that's your signal. Not to panic, not to gamble, but to pay attention, analyze intelligently, and position thoughtfully, because wealth isn't built by reacting to headlines. It's built by positioning ahead of them, and today's silver surge isn't a headline, it's a warning flare, and ignoring warning flares in markets has never ended well. And this is exactly why professional traders, hedge funds, and long-term investors are watching silver more closely than they have in years, because silver's breakout isn't just technical, it's macro, political, industrial, and monetary all at once, and that convergence rarely happens quietly and rarely reverses quickly and rarely ends without major follow-through. And that's why this move matters, not because silver is rising, but because silver is signaling. And what it's signaling is uncertainty, repositioning, inflation pressure, policy volatility, and demand shock. And when those forces align, capital flows change direction. And once capital flows change direction, price trends follow. And once trends follow, opportunity emerges, and the only question left is whether you recognize it early or late, because markets don't reward awareness, they reward timing, and early timing is exactly where we are right now, before mainstream coverage, before public euphoria, before late-stage chasing, before volatility spikes out of control, before premiums explode, before supply tightens further, before price disconnects from rational valuation, and that window doesn't stay open long, especially in silver. And that's why this is breaking news, not background noise. And that's why this move deserves immediate attention, not casual dismissal. Because silver isn't reacting to rumor, it's reacting to risk. And risk is rising. And whenever risk rises, hard assets rise with it, and silver rises fastest. And today's surge is the clearest confirmation yet that markets are repositioning for turbulence, not stability. And turbulence is where both danger and opportunity live, and silver sits at the center of both. And that's exactly why this moment matters, why this move matters, and why ignoring silver right now could mean ignoring one of the most important macro signals of this financial cycle. And whether you're watching for profit, protection, or positioning, silver just put itself back on the global financial radar in a way that cannot be ignored. And this is not financial entertainment. This is market intelligence, and market intelligence rewards those who act with discipline, not emotion, strategy, not fear and preparation, not hesitation. And that's the mindset required right now, because silver isn't asking for permission. It's moving. And the only decision left is whether you move with it or watch it move without you. And this isn't about Trump. Trump was the spark. This is about markets, money, power, inflation, uncertainty, and the future of financial stability. And silver just stepped into the spotlight because it thrives when stability disappears. And stability is exactly what markets are questioning right now. And that's why this surge is different, stronger, and more dangerous to ignore than anything we've seen in recent months. And that's why this story isn't over. It's just beginning, and the next chapters will be written not by headlines, but by price action, positioning, and policy shifts. And silver just wrote the first line, and that first line reads loud and clear. Something big is changing, and those who see it early survive it and often profit from it, while those who ignore it learn about it later through loss, regret, and missed opportunity. And that's not fear, that's markets, and markets reward preparation, not prediction. And silver right now is preparation in motion, and whether you choose to participate or not, this move is real, it's happening, and it's sending a message, and that message is simple. Uncertainty is rising, money is moving, and silver is leading. And if history is any guide, when silver leads, bigger shifts follow, and that's exactly why you're watching this. And that's exactly why this matters, and that's exactly why you cannot ignore this move. Disclaimer: this content is for educational and informational purposes only and does not constitute financial advice, investment advice, or recommendation to buy or sell any asset. All investments carry risk, including loss of principal. Always conduct your own research and consult a qualified financial advisor before making any financial decisions.